Hey guys, welcome back to Hardy Money SG, and today I'm going to talk about my Syfe January update with my portfolios, right? Now, you know that Syfe has recently launched that Syfe Trade app whereby if you sign up and deposit money, you could get $30 on your first deposit of $1,000. And also, if you execute your first trade, you could get another $30 deposited into your Syfe trade account. So hurry up and go sign up using my referral link if you have not done that yet. Now, you know I have been providing a few months update on my Syfe portfolio. Now it's called Syfe Wealth, right? Because they want to distinguish between the Syfe Wealth robo-advisor versus the Syfe Trade Services, right? Which is mainly for stocks trading. And for Syfe Wealth, you know that I have put my money into 3 portfolios, the Syfe Select Custom, the Syfe Equity 100 and the Syfe REIT Plus. But the markets these few weeks has really turned against us, right? We are in a correction zone. We are seeing Nasdaq and S&P falling off really severely from their all-time highs. And then we also see a lot of fear coming from the Fed inflationary hikes, as well as the pandemic situation of Omicron being really so widespread. Even fears of Russia invading Ukraine, right? So all these fears are really playing into the market and people are really fearful right now. That's why the stock market is really falling, and as the huge financial institutions like banks are really selling out their positions as well. But regardless, let me go into my Syfe portfolio update on my robo platform now. Let's go. Okay folks, so here is my Syfe dashboard, and let's start with my Diamond Hands portfolio. So for reference, today's date is 29th of January. So what you're seeing right now is my Diamond Hands Syfe Select Custom portfolio. So unfortunately, I have invested a principal of 3.3 thousand Singapore dollars, and the market value now has fallen to 3.1k Singapore dollars. So simple portfolio return is around negative $161, and you can really see from this graph, right? I have been dollar cost averaging around $100 weekly, and the time weighted return has gone against me at 1.7%, and that is really unfortunate, right? Despite me doing dollar cost average, the market has not been in our favor ever since December and has been constantly dipping. Well, that's the bad news, right? The good news is I will continue with this dollar cost averaging plan, buying into my 3 ETF tickers VWRA, QQQ, and CSPX, which tracks the S&P 500 index, at around equal portions of 33% each. So I will still continue with this plan. I think it still works out well in the long term, and dollar cost average, I will just ignore every kind of market movements because I cannot control the market, neither can you, so don't try to time the market. Okay, so the next portfolio is my Equity 100, okay, honey money. Now, if you remember from my previous side videos, I sold all my Equity 100 positions until it's left with $1,000. So whatever you see here is the value after I have resized my portfolio to $1,000. So very clearly, you can see I have a 3% loss of $30, right? So ignore this $73 and 4.88% negative return. The loss is actually 3% at $30. In my side previous update, it was around 5% return, right? So the market give and the market taker. So things are more like going back to the mean reversion and going back to the not so overvalued position, especially in the equity portfolios, right? So we look at what are these compositions of my portfolio, largely in the QQQ, S&P 500 Eco Weight, S&P 500 UCITS, which is CSPX, and also China ETF. So all these are my larger positions in the equity 100 portfolio. So for those who are already considering equity 100, why not just try my portfolio allocation on Diamond Hands? And this is largely because I do not have any China exposure in my Diamond Hands portfolio. So China, as you know, there's a great political and regulatory risk in there. So you must be able to stomach the risk despite the higher returns potentially. Now let's move on to my worst performer, right? Every time I was face palm when I look at this REIT Plus portfolio. Likewise, I resized my portfolio a few months back to $1,000. So what you see at 926, the absolute loss is at $74. That represents a 7.4% negative return. And the numbers here are not accurate because every time I receive a referral bonus, I will go and sell off a bit of my portfolios. If you have watched my previous side videos, you will know what I'm talking about, because all my referral bonus will go under this REIT Plus portfolio, right? So for example, if I put on this filter cup on my bonus and my withdrawal, then you'll see if I gain like $20 and $10, I will withdraw $30. If I get $50, I'll withdraw $50. So very simply, if we look at REIT Plus, it's definitely not performing well. I even look at my own REIT portfolio using cash, and most of them has gone down from the high, especially our Maple Tree stocks, right? Maple Tree Logistics and Maple Tree Industrial. Not doing very well. Even Parkway Life has sold off from a $5 highs and now it's in the 470 or 480 range. So REITs not doing well in Singapore as well. The whole market is down because of the interest rate hikes. And especially you should know that interest rate hikes are not favorable to REITs because REITs uses a lot of leverage in acquiring properties, right? So a higher interest rate means that they have higher interest expense to pay, and that's not good for their profit margin, which explains why REIT have been dropping tremendously throughout these few weeks. So 7.4% negative return since I resized that portfolio in November. I can only say that I'm just very disappointed in Singapore REITs at this moment, but there's nothing I could do, right? You cannot control the market. You cannot control what REITs you want to hold. You just have to believe in what you invest. And if you don't believe in what you invest, then obviously you lack conviction in it. And that's when you better pull money out of it because it will just tumble and you will just live with fear mentally. So I hope this very transparent sharing of my Syfe Wealth portfolio have given you a perspective of how your Syfe portfolios would look like if you invested in the same stuff as me. So do comment a thank you down below if you felt that this sharing was really useful to you, and let's get back to the video. Okay, welcome back. So you have seen my Syfe Wealth Robo portfolio and see how has it performed. Honestly, it's not really good because of market-wide sentiments being really negative. But now let's look at my Syfe Trade app right now. As you know that I have been buying Google at around $100 per execution to dollar cost average in the fractional shares. And let's see how has my Google trade actually worked right now. Okay folks, so now let's look at my Syfe Trade app. Because Syfe Trade app does not have a web browser version, so I have to use it on my mobile phone, and I'll do a recording on that. So let's look at the Syfe Trade app here. So we can see my portfolio is now $773, and let's look at my portfolio. My Google is still in the red. Okay, I'm losing like $14.50 on this, despite dollar cost averaging every week $100, because the whole market has fallen so much, right? So this is now my Google position. 773 is in USD, so we need to convert that. So we take 773 multiplied by 1.35, which is the USD exchange rate. So that's around $1,043. But let's not forget, I got $60 of sign up bonus when I did my Syfe deposit and my first Syfe trade executed, right? So that is actually a loss of $17 because I deposit $1,000 of SGD, right? And the $60 is the bonus. So $1,060 minus $1,043, that is a loss of $17, which is quite close to my unrealized profit or loss here. But it's okay. I will still continue with this Google DCA plan. I believe in the Google long term, especially now my channel is on YouTube, right? YouTube is under Google. So I really believe in Google for the long term, and I still have some cash balance. So I'll still continue my dollar cost average journey and update you on my Syfe trade. Oh well, so my Google trade is not doing really good as well. What a start to 2022, right? We started this month with a really bearish trend. But what to do? As long as we dollar cost average, we should not time the market. I think it's all good in the long run. So we'll continue with the execution of placing my trades on both Syfe Wealth and Syfe Trade. Now, if you want to refer to my previous month update on Syfe, you can watch this video over here that I updated in December. With that said, thank you for watching. My name is Christopher. This is Honey Money SG, steering young adults to financial independence.